My name is Luke Robinson, and I am a business advisor here at Collective. And at Collective, we're essentially your all-in-one, one-stop shop back office platform for the modern solopreneur. We're here to handle your company formation, setting up an LLC, turning you into an S corp, and handling the payroll, bookkeeping, and tax filing. And of course, any support you need throughout the year, we're here for you. But also, just really quick, we're just coming off Memorial Day here, and if there's any veterans in the crowd here, or any people that have served our country in uniform, I just want to say thank you. We owe a lot to you. And also, just to get some of the legal stuff out of the way here, what this is, it's an Ask Me Anything session surrounding taxes, surrounding bookkeeping, accounting, just sort of general best business practices. You can ask me anything here. However, don't, I guess, consider this, official tax advice or legal advice or even professional advice. This is just information. Like, before you, officially act on any of this information, speak to a licensed tax professional, a tax attorney. So just keep that in mind. But let's go ahead and jump into it, because I believe that I already have some questions that is flowing in. And the first one is, when should you consider an S corp? Well, that's a good question, because at the end of the day, Collective is an S corp company. And first off, let's just go into what an S corp actually is. And I think that the S corp is probably one of the most, I guess, misunderstood or misinterpreted area of tax. And a lot of people think, like, they will hear the term S corp, and they'll think that it's a corporation or some sort of business entity, but it's not. An S corp is a tax election. It's a way to ask the government to tax your business entity a certain way. So, for example, when you start business and you do nothing, you don't set anything up, any sort of business entity or anything like that, you're considered a sole proprietorship. And what happens when you're a sole proprietorship is a lot of your money, or in possibly all of your money, all of your earnings, are subject to the self-employment tax. Same thing with an LLC. Let's say that you go a step further. Apologies, I'm a little tired coming off this weekend. But let's say you go a step further and you set up an LLC. You still pay the maximum amount of self-employment tax. How you're taxed is not much different, or not different at all, really, between a sole proprietorship and an LLC. You're taxed the same way. But when you make an S corp election on that LLC, things change. And essentially what happens is you become a W-2 employee for your own business. And since you are now a W-2 employee, your business will pay you a wage. Like, it'll pay you a salary just like you'd receive if you work for someone else as a W-2 employee. But the advantageous thing about S corps is that the only sort of chunk of your earnings that's subject to the self-employment tax is your salary amount, whatever you pay yourself in salary. So, for example, let's say that you are making $100,000. Let's say that your net income in your business is $100,000. And when I say net income, I mean total income minus your expenses, minus business expenses and everything like that. That's what leaves you with your net income. But let's assume that number is 100,000. And let's examine what happens when you're a sole proprietorship or an LLC. To come up with your self-employment tax, you take that 100,000 and you multiply it by 15.3%. All of your money is subject to it when you're that sort of structure. When you make an S corp election, though, you pay yourself a salary, and only the salary amount is subject to the tax. So let's say that your total net is 100,000, but let's say you pay yourself 40,000 in W-2 salary. It's only that first 40,000 that's subject to the self-employment tax. The other 60,000 or just the rest of your money, sort of separate from your salary, the rest of your earnings, those are considered distributions to yourself. And a distribution is simply you transferring money from your business bank account to your personal bank account. That's taking a distribution. But the advantageous thing about S corps is that money is no longer subject to it. So in that situation, how you come up with your tax savings with an S corp is you take 60,000 and you'd multiply it by 15.3%. That's the tax rate you would otherwise pay if you were just an LLC or a sole proprietorship. And in that scenario, I mean, that's a savings of $9,180 a year in the self-employment tax. So, once a business owner reaches, a certain level of income, it can be pretty advantageous to go the S corp route. What are some different savings scenarios for S corps? Well, really, what will determine the different saving scenarios for S corps is how much you decide to pay yourself in salary. Now, obviously, the lower you pay yourself in salary, the lower that, or the less you'll pay in the self-employment tax. Because since that's the only chunk of your money that's subject to that tax. However, I'll have people ask me a lot. They'll say, okay, well, if I'm only subject to the self-employment tax on my salary, then why not just pay myself like a super low salary? Why not pay myself $1 in W-2 wages and take all the rest out in distributions and shield it from the self-employment tax? And my answer to that is because you're risking audit. It would probably increase the risk for audit from the IRS. And the reason I say that is because the IRS says, in terms of the salary, that it has to be reasonable. It's got to be a reasonable salary. So if their business in total is making $100,000 and you're only paying yourself $1 in salary, I would be shocked if an IRS agent would deem that reasonable. They probably would. So I guess the different saving scenarios is, how safe you want to be, how careful you want to be, in the sense to where if you want to, be super safe and, pay yourself a little bit higher salary, that's fine, but your tax savings will go down because your more of your money is subject to the self-employment tax. Can Coachella's tickets be a business expense? Well, there might be some scenarios where it'll be a business expense, but probably in most scenarios, no. Because for example, you used to be able to write off client entertainment, like let's say that you were taking a client to a ball game or taking them to a play or whatever, taking them to Coachella. Usually you could write that off because it was a client entertainment was a business expense. That changed with the 2017 tax law to where you can no longer write off client entertainment anymore. So more likely, with every tax question, of course, a lot of the answers are it depends, but I would say that most of the time, a Coachella ticket would probably not be a business expense. What type of forms do you use when you file as an S corp? Well, the form to make an S corp election it's called Form 2553. And, it's essentially a form that you either fax or mail to the IRS. And it's a form that asks the IRS to tax your LLC under the Subchapter S corp tax election rules. So that's the first form is Form 2553. And another form or other forms that could be involved are payroll forms. Usually there's forms called 941 forms, which are essentially payroll tax returns that you file quarterly with the federal government. And another form is the S corp tax return. It's Form 1120S, and it's literally an S corp literally has its own business tax return. So I'd say those are probably the main forms in the situation. Can I ride off an electric vehicle as long as it's over 6,000 pounds, even if it's not an SUV, and does it still allow for the EV tax credit? To be honest with you, I have no idea. Sorry. But I don't, because essentially probably what you're asking about is the section 179 deduction, to where you can write off a huge portion of the vehicle. In situation like that, I would speak to a CPA that, I guess, specialized in that or has a lot of experience with that, because the rules can be very complicated. And it's also, a big deal because that's a big expense. I mean, someone could write off like $30,000 in one time by doing something like that. And if it's wrong, if you get audited, it could be a big deal to, pay back the taxes you owe, or interest and penalties and things like that. So just keep it in mind. What are some monthly and quarterly filing tips for solopreneurs? Well, what I would say, well, first of all, is technically you're only required to pay your quarterly taxes quarterly. Of course, like that's why they're called quarterly taxes. They're called quarterly tax estimates. And essentially, each quarter you're supposed to pay your tax. You're supposed to pay your tax as you make money throughout the year. But honestly, for people that kind of want to, be a little bit more organized or something like that, you could technically make monthly tax payments, to where, instead of making quarterly estimated payments, you can make monthly estimated payments. And it's really easy to just do it on the IRS website. You go to the IRS website, you have your books in order, you have your accounting in order, you see how much money you've made, you multiply it by your applicable tax rate, and you pay that amount for that month. Now, that's not exact, because you have deductions, things might happen on your personal return, but it's a good rule of thumb. Like, in my opinion, it's a good tip, to where it keeps you organized and you're not overwhelmed when you pay tax payments monthly. How can you run payroll as an S Corp? Well, and what's funny, like how I'd answer this question is, you need to run payroll by not running payroll yourself. You need to run payroll by using a payroll processor, meaning, something like Gusto, which is a great payroll processor, and one that Collective partners with, or, something like ADP or Paychex, something like that. And it'll essentially run payroll for you. You'll decide your salary amount, and how much you think is a reasonable salary. But the easiest way to actually run payroll is to use a payroll processor online. Makes it so much easier. What kind of members does Collective work with? Well, we're mainly focused on the solopreneur, either sole proprietorships, single member LLCs, people that are kind of, one man or woman shows that are kind of running the show themselves. And we mainly focus on the consultant space, the creator space. I speak to a lot of software engineers, real estate agents, people that provide a service. And essentially the reason we do that is because people that provide a service, all of their certain, I guess, tax administration and how they run bookkeeping, or how bookkeeping should be run, is very similar between service-based professionals. So therefore, we've built a process that's very efficient to deal with those service-based professional situations. So we're here for the solopreneur, and specifically the one that provides a service. Also, people that you either expect to net more than $60,000 in a 12-month time period, or if you're already netting $60,000 in a 12-month time period. And the reason why we say that is because when someone is netting around $60,000, and they elect the S Corp tax status, and again, this is very general, this is not exact, your situation could differ, but generally, when someone is making around $60,000 and they elect this S Corp status, they're generally saving around $5,500 in the self-employment tax. That right there is quite a bit more, like around $2,000 more than what you pay Collective for the entire year to handle pretty much the whole shebang. We'll set up the business, make the S Corp election, of course, and provide a payroll processor. You know, give you a salary recommendation on what you should pay yourself. And then, of course, we would take over your monthly bookkeeping as well. Categorize your transactions, finalize your reports, and make sure that you get them monthly. And then, of course, throughout the year, as we run your books, you have a member relationship manager on your team who you can go to for any guidance or just sort of general support. And also, kind of as we run the books, we'll also calculate your quarterly estimated tax deposits, because you still have those as an S corp, of course. And then at the end of the year, we'll file your S corp tax return, your 1120S. So when it comes to the S corp, we pretty much do it all. And the price, like when someone elects the S corp tax status at $60,000, on average, it's very likely that you will save more money in the self-employment tax than what you pay collective. And here's another good question that comes up is, what's the cost of the packages you offer? Well, usually when you first come on board, there's a one-time $199 onboarding fee. And that actually covers, especially if you're an LLC currently, that covers backdating your S corp election. If you have an LLC in existence and it had an LLC in existence since the beginning of the year, we can backdate your S corp election to the beginning of the year, to January 1st. So, and that's a good deal. I mean, there are some people that have made, $50,000 already, $60,000 already in this time period. And essentially, paying the $199 onboarding fee to backdate the S corp election could save you theoretically thousands of dollars. So it's usually the ROI on it is pretty clear. But then you've got two ways to pay the monthly subscription, or pay the subscription rather. If you go the month-to-month route, it's $349 a month. If you pay in full just for 12 months at a time, they give you 15% off the total price. So then that averages out to around like $296 a month. But also, because of Memorial Day, Collective is actually running a promotion. And anyone that signs up within the month of May will waive your onboarding fee and give you your first month free. Oh, and see, Instagram agrees. It's given us a thumbs up. But yeah, if you think an S corp might be beneficial to you, or if Collective would be a good fit for your business, then please feel free to schedule a call with us and we'll talk it through. And before we even sign anyone up, before we kind of bring someone into the Collective ecosphere, we have a call with them. And we'll go through your situation. Like, we'll examine your business, your income, and we'll see if an S corp is the right thing for you to do. And if it's not, no hard feelings, no big deal. We'll give you some referrals, and we'll say, it's not quite time yet. Let's wait a little bit until it's more advantageous for you, because we don't want to sign anyone up that isn't going to benefit from our services. But yes, please, go to our website, send us a message on Instagram, and we'll set up a meeting for you. All righty. Can partnerships make S corp elections? Yes. So a partnership is essentially just a multi-member LLC. It's when two or more people are on an LLC. Now, unfortunately, Collective can't quite work with partnerships yet. So you wouldn't be able to come on board if you were involved in a partnership. But eventually we might. Eventually we might open that up to partnerships. But excluding Collective, yes, you can make an S corp election on a partnership. Now, the only sort of the exception to that, though, is if you're in a partnership with your spouse in a community property state. So, if like, for example, California's a community property state. And if you're on an LLC with your spouse, that's technically two people on the LLC, but the state looks at it like one person, like the entity is just owned by one person. So you're technically not a partnership. So Collective can still assist people that with their spouse are on LLCs in community property states. Do you still have to pay estimated tax deposits when you're an S corp? Excellent question. So it depends. I mean, technically, you still have estimated tax deposits requirements, if you owe taxes. But keep in mind, though, that with an S corp, you're going to be on a paycheck. You're going to be on a salary, which, and it works similarly to when you're on a salary when you're working for somebody else. Taxes are taken out of your paycheck and automatically paid over to the government anyway. So when you have an S corp, let's say that you didn't want to mess with the quarterly tax deposits, you can technically adjust your withholdings, your tax withholdings from your paycheck, and you might eliminate the need to do estimated tax deposits because you're covering your tax bill. There's no tax to pay because you've paid it all through your paycheck. But if you don't, like if your withholdings don't cover the total taxes for the year, then yeah, you'd still need to pay estimated tax deposits. Sure. So here's another good question. Do you offer other tax saving strategies throughout the year? As in what one can write off in order to minimize taxes due, in order to, of course, fully take advantage of the tax code? Excellent question. And the answer to that is yes. And that's kind of, when you first come on board, you'll actually sit down with an onboarding accountant and you'll go through, structure everything, take a look at your books, organize some stuff, and go from there. But also, from your member relationship manager that's on your team, that that person is there for general support. So let's say that you have a question about, if it's a good idea to write this off, or how should I run this to the business, and things of that nature. We're here to provide you support based off that. I'm so sorry. I'm getting ready to yawn. But like I said, I had a big weekend. I was celebrating Memorial Day, like I'm sure we all were. Can you still pay your children as an S corp? Well, technically, yes. You still can. I mean, first of all, you need to decide whether paying your children is a good idea in the first place. Because the thing about that is, like, technically you can pay your kids, like as a W-2, but make sure they're actually doing work in the business and make sure that you can prove it. So make sure that, like, let's say that if you ever were to get audited or anything like that, make sure that, like I said, your kids are actually working in the business, and have some records of timesheets, employment contracts, list of duties, things like that. Because some people just think that they can take advantage of the tax code just by paying their kids, even if they're not working in the business. That's not true. That's technically, that's close to fraud, because you're writing off a business expense without it being appropriate. Like you're writing off an expense that doesn't even really exist. So keep that in mind. Like, if you do pay your children, it's a good idea to have, a lot of documentation behind it. In what situations should you be a C corp over an S corp? Well, a couple. And keep in mind that the S corp election, and oftentimes it saves you money in the self-employment tax, but there are some rules surrounding the S corp. And one is ownership rules, to where you can technically only have up to 100 shareholders in an S corp. You can't have more than 100 shareholders. So, and with a C corp, you can have as many shareholders as you want to. So let's say that you ever get to a point where you want to have, a bunch of people involved in your business ownership. or you want to fundraise, and like if you want to issue a bunch of stock that people can buy, then you might not want to be an S corp because you're capped at 100. And so you probably need to go the corporation route, the C corp route, to where you can expand how many people can be involved in an ownership context in your business. Another reason is, in the US anyway, in order to be an S corp, you have to be a permanent resident. So if you're not considered a permanent resident, then you're not even allowed to even do an S corp election. So keep that in mind as well. Okay. I think we have a question that's coming in right now. Are there any S corp specific taxes? Well, federally, no. Federally, there's no sort of corporate tax rate or anything like that for an S corp. It's the same as an LLC. Now, in certain states, there are different taxes specifically for S corps. For example, in New York City, in certain parts of New York City, they have what's called a general corporation tax, GCT tax. And essentially, it's a tax that is specifically on S corps. So once you set up an LLC in New York, they even have LLC taxes as well. But then there's additional taxes when you actually make an S corp election. So to answer that, it depends on your state. Most states don't. Most states do not have S corp specific taxes. But New York does. I believe Tennessee does. I believe they have some excise taxes that are involved with S corps. So just do some research and just make sure that your current state is advantageous for an S corp. Okay, I think I have time for one more question here. Is there... Hush, hush. I'm sorry. My dog is freaking out. Charlie, shh, it's okay. So, is there a deadline to backdate the S corp election? Yes, there is. There's a collective deadline to do so, in the sense to where it's June 30th is what it is. Anyone that signs up to collective after June 30th will backdate their S corp election to July 1st. But anyone that signs up before, and if you have an LLC in place, we can backdate the S corp election to the creation of your LLC this year. So yes, just keep in mind that June 30th deadline. And that's all the time that I have left today. I actually have a meeting with a prospective collective member that I've got to run to, but it was a pleasure, like it is every week, and I enjoyed having a conversation with successful small business owners like yourself. And I'll be here next week for another Tax Tuesday. But in the meantime, keep in mind that collective will always be here. So if you think that an S corp might be in your best interest or collective could be a good fit for your business, then reach out to us and schedule a call.